Hey, good morning, Ken.
Morning, Bruce.
Well, I think we are live, and I'm just looking at our attendance list. We see a few people jumping on, so maybe we can give them just a couple of minutes, let everyone get in.
Okay, that sounds good.
Just give everyone another minute. Right, it looks like the attendees joining has slowed down a little, so maybe now is a good time for us to get started. So Ken, I am ready whenever you are.
Okay, great. Well, welcome and good morning to everyone. Thanks for your participation and interest this morning. I want to thank the ProNovos team and CBIZ-Somerset team for coordinating this morning's presentation. I'm going to give a quick overview. CBIZ-Somerset is a national practice CPA firm. We have a focus on construction industry, a very specialized construction industry niche with general contractors, construction managers, heavy representation of electrical, mechanical, specialty trades, and capital intensive contractors. And as part of our commitment to the industry, providing services more broad than financial and tax compliant. But, it's really important to have some focus on industry operational and best practices. So to that end, CBIZ-Somerset and a group of other construction-focused firms across the country, we've developed a partnership with ProNovos, a construction intelligence cloud. And it's data analytics program that will take your ERP data and transform it into user-friendly workflow and charts. It's simple and seamless, links with many popular ERP systems. You can be set up and running in weeks, and it can make a real impact in driving performance for your construction company. So today's webinar is to some degree, it's modest in the sense of the level of content, but it's a sampling live product demo showing the power and capability and benefits of ProNovos, and who better for us to provide that demo than Bruce Orr. Bruce is the founder. He founded ProNovos in 2012, and after a 20-year career in data analytics. And Bruce is the CEO and chief data analyst from Atlanta-based ProNovos. So with that, I'll turn it over to Bruce.
Ken, thank you very much for the introduction, and good morning, everyone. Thank you for joining this hopefully very interactive webinar. Ken, this is to me a special webinar to co-host with you. I've been knowing you for almost 2 years now, and I know that you are a seasoned advisor, and I know that you care a lot about your clients, especially helping them safeguard their profits. Yes, I think Ken has said enough about me, and maybe what we could do is get into what we'll cover. And I like to start off just by giving context. This is my belief based on experience in education and training. However, in today's dynamic and complex construction landscape, I believe you either adapt or you lag behind. And we all know that change is very hard. I'm sure everyone has heard about this. But adaptation is not merely about adopting the latest technologies. I think it's about integrating sound financial strategies that is woven into the fabric of your operations. And that's precisely why we're here today. We're going to delve into pragmatic, real-world methods to protect your profits and optimize your cash flow. So we'll guide you through a comprehensive roadmap, and it's tailored to the unique financial challenges and opportunities that are faced by many commercial contractors. And so we'll set the stage for a more secure, profitable future and show you how this all works. So we will talk about, we'll talk about work in progress, and we'll talk about I like to call it managing the pulse of your projects. We'll also move on to project forecasting and how do you predict success and mitigate risks. We'll also go into change order analysis. So we'll navigate the maze of adjustments. We know change orders are a necessary evil sometimes. And then we'll talk about billings, the importance of billing on time and accurately. And then lastly, this is, the mirror reflecting your business, the financial statement. So we have these 5 things that we'll cover today. And from there, we will go into a lot of the Q&A. So some quick housekeeping items. If you have any questions, please drop the questions in your Q&A window, and we'll address those. However, before we do that, I'd like to hear from Ken. Ken, with your extensive experience in advising contractors, you've seen businesses through thick and thin. And based on today's overview topics, we talked about WIP, project forecasting, change order analysis, billings, and financial statements. What would you say is the most common financial mistake that contractors make? And how does addressing that mistake relate to the broader framework we're discussing today?
Yeah, sure, Bruce. And we work with, all types, shapes of contractors, and ultimately it all comes down to the same impact, and that's what we see is in properly investing in what we call the project office. And the project office includes executive management, financial management, and project management. So those 3 components, you have to invest in all 3 components. And it's critical to have accurate, timely information and being able to use that data effectively. It's a collaboration, it's communication, communicate, but you have to have the data in order to do that. So internally with the financial management would be the CFOs, controllers, project analysts, different contractors and size and scale have different investments in those functions. But then that link with the project management, which is the PMs and superintendents, et cetera. And that investment, having that proper investment and the data available so that all these groups can work together, these teams of individuals in your organization can work together regularly and at a minimum monthly, and just have that timely, accurate data in real time, easy to understand data. That is where we see many contractors, from a best practice standpoint, many contractors either succeed or struggle.
That's interesting, and I think it's well said. When you consider all of the data and all of the processes that most contractors have to deal with, I think it's almost like sometimes it could be insurmountable or seemingly insurmountable. And I think that's why when ProNovos worked with, or is continuing to work with CBIZ-Somerset, we're trying to identify best ways of helping contractors manage that. And so I think that's one of the reasons why, because of your feedback, Ken, we decided to focus on some of the most critical components that contractors absolutely need. Like, for instance, WIP reporting. I may have heard you refer to this as like the financial health check of ongoing projects. And as we talk about this, I think we're also going to talk about the roadblocks on the path to transparency, because what you said around getting everyone to communicate, I think sometimes is very difficult. And from my observation, it does not seem like contractors are unwilling to do that. They just don't have the tools to do that, to make that transparency. And I also know when you are automating this, it empowers your operations to work a little more effectively. And so, Ken, from your vantage point, again, as a seasoned, trusted advisor, I'd love to hear a real world example where poor WIP reporting had a detrimental effect on a contractor's financials, and also how rectifying the WIP reporting practices turn things around for them. I'm just throwing this out here, so I'm not sure if you are able to speak to that, but before we continue to dive in, I think it'll be great to hear based on your experience.
Yeah, you bet, Bruce. And I know most of the folks participating today, and they all know this as well. But construction is unique. From the perspective of the work in progress, it's the only industry where a significant portion of your balance sheet assets or underbillings, and also your balance sheet liability overbillings, and then the net of those and the impact to your margin or your income or revenue earned on the income statement. This is the only industry where all of that is based on significant estimates. And those estimates are in the form of an initial estimate, bid, budget, and then ongoing projections of costs. And if you think about it, that's really pretty scary from the perspective that this is a collaboration, that is information that is really predominantly known by non-financial folks. So your PMs, your superintendents, those running the projects, have to have the data timely and accurately in order to be able to effectively manage projects. So, this WIP schedule is so unique from that perspective, and all the risk that's involved in managing from a contractor to manage their business profitably from the perspective of not only profit, but also cash flow. And that's all embedded in this WIP schedule. And having this timely and accurately in the collaboration between management, project management, financial management is so key in having this data.
That is a great segue into the other piece of the puzzle here, and that's forecasting. As you said, most of the time, it's the WIP schedule and your anticipated billings is based on your projections. So we're going to also talk about forecasting and basically the importance of it. And I know we all know this, so please forgive me, audience, if I am speaking a little elementary here, but I kind of think of it as navigating towards a successful future, because you're always looking ahead. However, we all know that there are obstacles in the crystal ball, if you will. But what we're going to do is share with you some of the power of data-driven insights that you'll get from a tool like ProNovos. And since you brought it up, Ken, project forecasting, it often seems like it's a blend of art and science, especially in the industry where a lot of things are unpredictably outside of the norm. Again, I wanted to have this webinar with you because I'm so curious to hear about your experience. So can you share an example of where effective project forecasting actually saved a project or a company, if you will, from potential disaster?
Yeah, so and it happens all the time. I mean, it's part of running a construction business. You just can't take your eye off the ball. So it comes back to having the tools and the communication. Um, Contractors and those that know me have heard me say this many times, but you're one bad contract from or challenging contract from wiping out your equity. And I've seen both sides of this equation where, the data exists and management, financial management and project management all work together timely and efficiently, and they communicate and they work with the client for, if it was easy, everybody'd be doing it. Managing projects is a challenging process, and you have to work with your client for early identification of challenges on projects, and have an effective resolution, early identification and effective resolution. And that's the importance of having these type of easy to understand tools, and honestly minimizing, if this is done, what we call the project office, if this is done well, it actually requires less time of your project managers from an administrative perspective, because you're providing the data they need. And there's a check and balance and a collaboration with your project managers in financial management, but you're providing the data they need in an easy to understand format that you can always squeeze out. I mean, their job should be to squeeze out that extra margin and to bill timely and collaborate as a team in order to accomplish those goals. I've also seen the other side of the equation where it's not done timely, and time is not your friend. And when it comes to communication, identifying scope and change orders, and maintaining project gain, I mean, the standard should be maintaining margin and having no fade. That should be the standard, plain and simple. And it's a pretty high standard, but having these tools can drive either side of where your company ends up on that.
It's interesting. You're right. 100%. I appreciate you sharing that. The working with your clients, working with your subcontractors, things are going to happen that requires change. And I think that is another reason why we feel that change order management is a major area that we put under the microscope. So we're going to talk about and dive into the importance of change order analysis. I don't think ignorance is always bliss, and in this case, it is not. We will show you how it can be risky if you're not processing change orders correctly. And what I mean by that is every contractor, they have a target margin, and sometimes we get these change orders that eat away at our margins, and we show you how in ProNovos you can put those change orders under the microscope and do some analysis. And Ken, you kind of spoke to that a little bit, and I'll say my questions for the next one. And the last thing that we'll talk about is billings. So billings is, in my opinion, the fuel for your business engine. But there are barriers to billings when you're not billing on time and you're not receiving, your cash in a proper manner. So we'll talk about the barriers to cash flow. And Ken, this is an interesting area. I know that there's been a lot of education around this, but I feel like there was something you said that stuck out to me about billings, and I'm kind of curious to hear if you wouldn't mind sharing with the group this like a story or an example of where billing errors and delays had a cascading effect on the overall financial health. If you have anything that you can share with that.
Yeah, sure. You bet, Bruce. So, um, there's always focus on profit. That's a big focus, and that's important. And the the WIPs, the work in process schedule, and projecting costs, and projecting timely communication of scope and changes. That's all focused on profit. But profitable companies um, can be in a position where they don't have a lot of cash flow, and cash flow is just as important as profit. So we've heard many times, and this is where communication and education is key. Again, on the financial management side of the business and the project management side of the business, that we have got to bill to progress. You don't underbill. And again, that's a high standard, but I would say that underbilling should be an exception. Billing to progress monthly should be the standard. And then in some cases, you may be in a position where you can bill ahead. And that really comes down to who's managing or who's financing the project. Is it the contractor? If you're underbilled, are you the one financing the project, or is it your client? If you're billing the progress, it's one thing to bill it, but we also have to collect it. But the other piece of that consideration is that you want to be able to identify and bill your change orders timely as well in order to get those into the system. So, certain red flags, underbilling should be a red flag. Change in margin should be a red flag. So, cash flow, the analogy, cash flow is king. Yeah, it's great to be a profitable company, but we also have to manage the billings, and underbilling should be an exception. That should be a standard that every contractor should incorporate, that we should not be underbilled. We should bill to progress.
Yeah, well, it's funny. It seems like everyone should know that. And I'm sure everyone does know that, but it's so hard to do. And I think it's probably hard to do because you don't have visibility into a lot of the data. But I appreciate you sharing that. And the very
just
last,
one
oh,
quick
sure.
add to that too, Bruce, that and again, I know our audience this morning, and they're aware of this, but again, education of your project managers. You're typically starting in the hole to begin with. Project mobilization costs, and then if you have retainage provisions, you're starting in the hole, which puts even more pressure on proper cost projections, change order management, and billings. You are in the hole to begin with.
I never thought about that, but that makes a lot of sense. That's yeah. So we have to catch up. Thanks for adding that to that. Well, the last thing we'll talk about and dive into is financial statements and analysis. I know a lot of business owners look at this as a lagging indicator, but it's truly an X-ray of your business and some of the challenges. And I think a lot of the companies feel it is a lagging indicator, mainly because it is after the fact. But however, looking in the future, the mirror can be cloudy. And so what we're going to do is talk about how to have a more in-depth understanding of the financial statements and how ProNovos helps you with that. And Ken, I know that you have a lot of experience. This is your domain, and I'm going to hold my questions for you on this topic until we get into the actual product. How does that sound?
That's fair. Thanks, Bruce.
All right. So with that being said, let's get into the product. And we'll now focus our attention on the first component of today's roadmap, which is the work in progress. As we talked about earlier, this is the pulse of your projects. Now, because this is not necessarily pure education, we're focused on ProNovos. I'm going to talk about how the data gets into the ProNovos system. So, as Ken mentioned earlier, we connect with just about all major ERPs that are out there. Your Sage 100s, your Sage 300s, Foundation, Computer Ease, QuickBooks Desktop. We have a whole list, and we'll share that list with you. But once that data is connected, it ends up displaying in the ProNovos platform, much like how you see today. So as we talk about understanding your WIP at any given time, it allows you to closely monitor jobs, your revenue, and the financial health of your ongoing projects. I'm going to talk a little bit about our belief. We believe that it's key to timely decision-making and the avoidance of unwanted financial surprises. And truly, something like this is in essence like the vital signs monitoring in a hospital. It tells you immediately health statuses of the projects. With ProNovos, we aggregated a lot of the data that you currently have. So as you see, we're looking at all active projects. We're looking at your earned revenue collectively, your total backlog, how much you've billed to date, and your over under billings. As you heard Ken, he says overbill as much as possible. As a matter of fact, I think he said don't underbill. So we're trying to show you your over and your under billings. We also know that with most ERPs, there's a project manager that will pull over. So we pull over all the project managers. We're showing you the revised contract amount by project manager. You can look at either project profit, backlog. Again, one of the main things that we focus on at ProNovos is taking this data and making it visual for you so that you can have the communication that Ken was talking about. As I continue to go over to the right, we have your project class. Now, project class, that description might change from ERP to ERP, but we take the data that is in your ERP and we take that area on the job where you're tagging government or commercial buildings or education. So we're still aggregating that data so that you could see what is going on. And at any point, you can click on, say, a project manager. And this project manager, Jack Jones, he has about 10 million in revised contracts. You'll see to the right the different projects that he's working on. Down below, this is the grid that shows all of his projects. And we'll actually get into how you can effectively use ProNovos to manage your WIP, because there are a lot of intricacies that I think are overlooked when a WIP schedule is in Excel. Intricacies that could be very important to managing your business. Kim, before I continue to dive into this WIP, WIP reporting often, it involves multiple stakeholders like you talked about. So you got the accountants, project managers, and sometimes even the clients. So in your experience, how have automated WIP reporting systems improved cross-functional communication and decision-making within commercial contracting businesses?
That's it. That comes back to, again, what we envision as this project office model, which is a integration and a collaboration of management, financial management, and project management. And we want the project managers to be running the projects, and that's what they want to do, and that's what they love to do. What we don't want to do is bury them in a significant amount of administration, accounting and paperwork and administration. And that is the power of a program like this, is that it takes this data, puts it right out there in a easy to understand, in when needed, in a graphic format, to paint the picture and tell the story, to really minimize that administrative time, and to allow project managers to manage projects and to use this data to do that, and then create that cross collaboration and that communication, which is so important to work together in that form for the project managers to be able to run their projects. And this gives them what they need efficiently and effectively to do that.
So that's well said. And I think that the good news is automation, it can be your knight in shining armor. And so while we have all of the projects for a particular project manager, I'm going to dive into one of these projects to show you how you can update your WIP. You can see your margins. You can see your projections from your project manager. But we all know that every WIP schedule has the potential of looking different. And that is why we have considered all of the different ways you might want to see your WIP. So we have an edit columns button that'll give you access to essentially every type of metric that you might want to include on a WIP. We have worked with Somerset for a while, and we know that they have a certain way that they like to see the WIP for their clients. So again, I wanted to point that out, that you have that ability to do that. You have the ability to export your WIP. But let's say that we're looking at this one project, the Chrysler Building. If I click into the Chrysler Building, you'll get a flyout window. I love this because, again, what we're trying to do is help you manage a project so that you do not have, you're not caught off guard and have surprises. When I click into this, you have certain functionality. Like, for instance, you can update your WIP. Sometimes your final contract is going to be different from what you have in the system. So you can update the final contract to what you think that amount will be. You can update the final cost. Now, this final cost is, in fact, the final cost that you think the project managers are giving you. But as a financial manager, you may want to be a little more conservative, or you may just not want to accept the projected final cost that your team is giving you for whatever reason. You can update the final cost, and you can make it date centric as well. What happens at the end is when you make these updates, you start to see your margins. So you can see, you can start to see, click on lump sum here. You begin to see your adjustments to the contract amount, the cost. We give you details and all the details that you need about your project, because ultimately what we want you to understand is how your profit margins are fluctuating. Now, this is a test environment, so hopefully you do not have jobs where your margins are changing like this, but it gives you an opportunity to have conversations. And if you continue to scroll, all of these root cause breakdowns are the reasons your project manager has given you to why the adjustment might be different from what you actually estimated. And this is, in my opinion, one of the biggest appeals to automating a WIP. Not only are you having the data at your fingertips, but you're also able to see how you got here so that you can ask the good questions that you have. And this is, again, we exist to try to help you protect your profits and protect your cash flow. So we got here, by having the project managers project their final cost. So what I just did is I went to the actual project. This is the view that your project managers will see. As I said earlier, the data will automatically sync from your ERP. And we will, as long as you're budgeting from a cost code level, we'll pull your budgets, whether it's your cost, your quantity, or your hours. We pull all of that data over. And so, as Ken was talking about, you have a lot of historically non-financial people making adjustments, and they're trying to give you some critical information so that you can bill on time and you can manage your WIP schedule. Can this particular area around forecasting is really interesting. A lot of what we're doing is nothing new. We're just taking technology and we're automating it for our clients. And technology has been a game changer in many industries, and we all know construction is no exception. So, in your experience, what has been the most impactful technology advancement in project forecasting for contractors? And how has it translated into real world benefits? And I love this. I love to hear you say ProNovos has been a game changer, but please, we have seen the rate of technology increase. So I'm kind of curious, what have you seen to be an impactful tool to help contractors do this?
Yeah, and I'm going to do a combination of giving you my answer to that, Bruce, but I'm also going to turn it into a bit of a question for you as well. But it's really just how you can leverage proper or available technology to streamline and make this process as effective as possible. And again, communication, education. But Bruce has shown us, again, this is a very high level but example of some dashboard tools on the WIP. And I want to clarify. So when we started working with Bruce and his team about 2 years ago, it was CBIZ-Somerset and 7 other firms, CPA firms with heavy construction niche service areas, all working together to take what was already an excellent tool, and then working with Bruce and his team to manage that. One thing I want to clarify, and what's really in my opinion a big benefit here, is this is not like a system integration. You talk about getting a new system and integrating a system. We're talking, those of you who have been through that, months and year worth of a lot of work and effort and setup and challenges and frustrations. This is not that at all. This group of firms we've worked with Bruce and his team, and kind of on a hierarchy of common systems, where they've now been, taken many of those systems and integrated this to where this is automated within weeks. Is that fair, Bruce? But I'm going to let you elaborate on that and on how streamlined this process is in order to drive this efficient use of technology.
Yes, and I appreciate the clarification. So we recognize that there were things that you were already doing as a contractor. You were already preparing your WIP schedule. You were already receiving updates from your project manager. And there was this disconnect between the two. And so what we did is we started focusing on the operations team to see how we can help them make more accurate predictions, and how can we get that data to the financial managers, the accountants, the CFOs. How can we get that data to them quicker? And so what we've done is we understood what was happening most often in Excel, and we sort of replicated that process and improved it. So in this example, when a project manager, in a couple of weeks, your data is here. We go through an extensive QA process where we just try to make sure that the data is syncing on time and we're receiving all of the changes as accurately as possible. But for some ERPs, you can sync your data in 24 hours. We'll have you up and running. The biggest component is not the integration, it's the training and education that we focus on. We think that it is extremely important to have your operations people involved in a project like ProNovos, and I'll tell you why. We know that they are extremely busy right now. We know your project managers, they have a lot to deal with, and oftentimes they're working on multiple projects. So when we train them, we take existing budgets. So I'm going to walk you through the process and how it works. So a project manager, they'll see all of this information on their screen. And there are ways that they can make adjustments. So if I scroll down, we have stainless steel as a cost code. We have it separated. You got your labor, you have your material, and if you have any rental equipment, you see that as well. If we focused on labor, we have a quantity, a budget quantity of 100. Now, most often, the contractors that we deal with, most of them don't have their quantities. If you're a self-performing contractor, we know that it's idealistic to put your quantity budgets in. But if you do have them, we'll pull that over, and you can even make quantity adjustments in here. If you're using a system like Procore or HCSS or something like that, we'll pull those quantities over as well. But then you have your hours. So if you don't have your quantities, then most often you'll have your hours. You can actually go in and you can project your final hours in ProNovos. And when you project your final hours, it's going to do the math and say, based on your estimate or based on your actual, we're going to do the calculation to tell you how many hours it's going to take to complete it and what that projected final cost is going to be like. Now, let's say you don't have your quantities and you do not have hours, but you have your budgeted cost. You can come into ProNovos and say, $5,000 is what we budgeted for labor for stainless steel. And my last projection was $6,400, but I think it's going to be more than that because my superintendent is giving me, is telling me that there are some change orders that are coming. So they could come in and they could override this from 64 to 7. And the moment we do that, you're going to see the changes happening. So now our projected cost to complete is $7,477. I'm going to not accept this because I want to show you the most impactful functionality that ProNovos has as it relates to making adjustments. If the project manager clicks on the line and they make an adjustment to that projected final cost, we now have the ability to understand what has happened on that project. Why is that variance happening? We have codes that are most often used. So it could be a design oversight. I'm going to select this. And it's going to say, we need you to confirm that it is $1,000 over for this moment in time. When they make that confirmation, it writes back to the WIP, and you'll be able to see that. The reason why I really spend time focusing on this is because imagine if you have 30 projects and you have project managers on all of these projects making these adjustments. Well, ProNovos will aggregate all these reasons and we'll lay it out for you as an enterprise. We'll show you the most, and I'll actually show you what that report looks like in just a second, but it'll show you all the reasons why you save money on fast production rates, why you've lost money on design oversight across all of those jobs. I really love this because, in my opinion, this is where the money is made or lost. Now, if you have a bad estimate, you can add that here. But going back to what Ken was talking about with communication, this is an effective tool to communicate not only with the owners, with the financial managers, but also the estimators. Now, this is very impactful, and I can talk about other ways you can forecast. However, one of the keen insights that we've gotten from Somerset and other CPA firms was the projected final cost typically is a number, and they said it'll be more valuable to our clients if you can tell them when that cost was going to be spent. So if you're a really good project manager, you can go to the timeline view and you could start estimating when that projected final cost will be spent. It's going to take the scheduled start date, your projected end date, and you can either project by cost, if you know it, or by percent complete. Now, one of the things I like to say is there's a huge amount of administrative burden that most project managers are feeling. We live in the day and age of Chat GPT and all of this AI. So if the system is smart enough to predict for you, well, it should. And that's what ProNovos will do. If we know that you have a projected cost to complete of $600,000, you can tell ProNovos to graph it out for you, change this, and tell me when we think we're going to spend this. So you could do that, and you could say, hey, do we have a low, medium, or high S curve where we're going to spend that money? And this is all based on history and based on the behavior of the project managers. So, you know, being that we're probably 70% complete, I'm going to say it's going to be a high rate, and you see how that S curve is changing, and we're making those predictions. But if we scroll down to the bottom, we'll also see how we're projecting those costs to the end so that we can get to that projected final cost. I can go into more detail. I love this stuff. I love trying to give you data and making it actionable. So I know we have a few other things to cover, and Ken, I feel like I'm monopolizing our conversation. So I think from here we can segue to possibly one of your favorite topics, and I think that's change orders. And so Ken, you know, as it relates to change orders, we kind of talked about this before, but streamlining change order analysis, that whole process, how have you seen your clients utilize something like this, if you have at all? And what are some of the headaches that you think they're experiencing around change order analysis?
Yeah, so this is obviously an area that you can get a varying degree of input on how to handle it from contractor to contractor. But I think the real key is that you know, if there's a potential for a change order, I think everyone can agree that having the tools for early identification is the first step. Then the second step is you know, when do you actually record or recognize that change order, you know, a pending change order, if you will. But again, I'm coming back to kind of a common theme here, is that there's communication with financial management and project management. And we've got the tool, we've identified their scope, challenges, and we may even be already incurring those costs. You know, you don't always have the luxury or the benefit of waiting to start, you know, because you're on a schedule to start, you know, implementing those costs, whether, you know, it's an agreed scope or change order or not. But the key is we've identified, we can put in, as long as financial management and project management are communicating, we can say, we can agree to put it in as a pending change order, or we can agree to hold off. But, you know, it's all about timing this, communication, revenue recognition. The one thing we do know, and we've seen this, is if you've got a project, let's say it's a 6-month or a 12-month project, and if we're 4 months in on a 6-month project and estimated costs haven't changed, we know we're not managing that project. If we're 8 months in on a 12-month project and estimated costs haven't changed, we know we're not actively managing that project. And if there are scope issues, the other thing we know is we're not going to get a change order at that point. So we ought to be looking at this every month, and this type of tool provides that capability and the ability, and everyone knows that, you know, if you're a 5 million, 10 million, 20 million, or a $1 billion contractor, squeezing out 1% of margin because of this type of transparent and easy type of tools to utilize and communicate, this is how you get there.
So I couldn't agree with you more. I disagree very few times with you, because I know you know your stuff, and I learn a lot from you. But I 100% agree with you, because what you said lines up to what we've heard with all of the contractors that we work with. And so from a company perspective, what we try to do is provide insight to you, the executive, on how your change orders are being processed. Again, you'll see a theme as well. We look at change orders by project manager, even by geographical area. If you are doing work further and further away from your home base, if you will, what we've discovered is the chances of things going wrong are more than likely going to happen. And the data actually shows it. The further away you get from your home base to execute work, you'll start seeing your, more challenges. And what this is showing is all of the change orders across the jobs the states and jobs that you're working in. You can, again, click on a particular area, and you can start seeing the change order types, the monthly change order amounts. Scrolling down, you see the individual change orders. You can, I think, click on one of these, and it's going to show you, maybe not this one, but it'll show you the details of the change order. Now, sometimes things are too high level, and we need to get to the specifics. So what I'm going to do is go back to how a project manager will see the change orders. And for that, I'm going to come back to this project, our Chrysler building. And if I click on the overview, the project manager sees all of this insight. Going to change orders, if we wanted to understand their change orders specifically for this project, they can click on this arrow, and it's going to show them how they've been processing change orders. Again, all of the change order statuses. How much do we have in approved, pending? We see our original contract amount, the budget, the change orders. But if a project manager took time to look at this and put a study hat on, they'll see where the profit margin and fade has been happening. And I think that every stakeholder in executing a project, the client, the subcontractor, the prime contractor, everyone hopes that we all can make money. If we're not making money, then it's not a good relationship. So if there is a problem with processing change orders and you need to communicate to your client, you got data to show them that. You could even go down to the actual change orders, and you could tell them, oh, listen, we've got all these change orders that you've been rejecting, and we need to have a conversation around how we can get better and collaborate. I'm looking at the time, Ken, and I want to make sure that we hit a lot of the other areas here. Now, if change orders are important, then we got to talk about billings. As we move forward in our discussion, we are going to focus on billings and why it's critical to have timely and accurate billings. So I feel like a lot of my questions are a theme here, but again, you're the man with a lot of experience in this area. Can you talk to us a little bit about a sound process and helping improve cash flow and financial stability as it relates to billings and cash and receiving cash?
Yeah, and they're, I mean, they're tied together. Again, you could be a profitable company but not have good billing practices. Every contractor, from a not only a profit but a cash flow perspective, you want to be best of class. Again, it's not intended to be complicated. I mean, if you can bill it, it ought to be billed. You know, why is it reflected in an underbilling? Those ought to be questions that these type of tools will flush out. And then if it's billed, we ought to be able to collect it. You know, having an unbilled or an underbilling is an asset that goes right to income. And there's kind of this standard that, that goes right to income and right to equity. And we know equity is important for banking and bonding, but underbilling should be the exception. And if it's underbilled, we ought to ask why. Is it billable? I mean, that becomes a question and a high risk. But it's one thing to bill it, but it's another to collect it. So once it's billed, we've got to have those proper processes in place to communicate. We can build WIP schedules. Bruce and his team can build a WIP schedule that includes not only margin and profit, backlog, cost to complete, all the typical things you see in a normal work in process schedule, but they can show cash flow by project. So are you net cash? There ought to be a goal. We ought to set a standard to be net cash positive on every project within so many days of mobilization. And we call it the money graph. There's a graph that Bruce and his team have designed that integrates not only margin, profit, projected cost, projected margin on projects that shows your actively managed project, but also cash flow by project. And we ought to have a goal to be cash positive on projects after a reasonable period of time.
That makes sense. I had to flip back to this. I kind of skimmed over early on, but this is again what the project managers, what they see when they log in. And this is on the overview of the project. And you're right, this is the money graph. This shows you if you're being the bank or if your clients are paying you in a timely manner. So that's the money graph that Ken was referring to. Going back to the monthly billings, this is a company perspective. We take all of your project managers and we take all of your data that's active, and we show the number of projects that had cost, how much you spent, your projects billed, and your total billings. Sometimes what we want to focus on is what's going on with our problematic challenges here. So like, for instance, I clicked on a PM and we have sliced this horizontal graph into different slices, what hasn't been billed, what has no contract, and what's fully billed. And so typically we focus on what hasn't been billed. Over to the right, you got what you should have billed for these projects. And if you continue to scroll, you'll get to see information about that project. So, billings is so important. This is one area where we have focused on trying to provide you insight. I see that we have a question, and I also recognize that we're coming up on the hour, but I'll actually grab one of these questions. Our project change orders, whether they are pending or rejected, are found in a silo called Procore. We're very familiar with Procore. We sync with Procore, and you could see that data in here as well. And the second part to that question, can you pull them easily into the dashboard? The answer is yes. And I will underscore easily. We want to make sure that you don't have to be a data scientist to do this. So yes, you can pull those change orders, the potential change orders, all of that from another system so that you can get that visibility. And Ken,
if I could add to that, I know we're out of time real quick, Bruce, but it seems like magic and almost too good to be true. But I can tell you this integration is weeks And we've got clients that have utilized this and within weeks or a month have indicated how much of an impact it's made already to their businesses by having these capabilities, this power and this capability of this type of a data analytic cloud-based program.
Well, I appreciate you saying that. We live for the same reason, and that's to serve our clients. And we are out of time at the moment, and this was going to be the first of a series of webinars that we'll do. There is a lot more that we'll cover: cash flow, forecasting, AR collections. The financial statement was the last area that we were going to talk about. Ken, I apologize. I probably should have reduced my talk, but I get excited. Hopefully this just, again, allows us to come together and talk about financial statement and analysis. And maybe we could even focus on this as well. So any closing notes that you want to provide to the people on the call?
I know we had a lot to cover. It was an optimistic agenda, but I think focusing on the WIP and cash was really key. You know, I don't know if it was Vince Lombardi or Bear Bryant, but I'll leave you, and that doesn't really matter. I'll leave you kind of with a sports analogy. Pursue perfection and achieve excellence. It's one of my favorite things to say. And, you know, it's about collaboration and communication and teamwork. And that's our goal with partnering with ProNovos here for the last couple of years. And I think we've come a long way and have accomplished a lot. And we're very proud of what between Bruce and his team and what our member CPA firms have accomplished with this project.
Yes, I could not agree with you more. If anyone wants to get more information, please feel free to reach out. We will send the recordings of this webinar to you, and love to hear from you. If there's something that you didn't see, you like to see again, we'd love to hear from you. Ken, thank you very much. I wish you and the rest of the audience a great week, and we'll talk soon.
Yep. Great. Thanks, Bruce. Thanks, everyone.
Thank you.